Hi there. I'm Mike Larson, editor-in-chief at MoneyShow, and today I'm going to be speaking with David Keller, Chief Market Strategist at StockCharts.com. David, thanks for joining me for the series here.
Thanks, Mike. It's good to see you.
Great. Let's start with your technical take on this market overall, right? I mean, what are you seeing in stocks now that we've just passed the mid-year point for 2023?
It's incredible how resilient the market has been in the first half of 2023. And it reminds me so much of sort of that low volatility, slow and steady incline that we had in 2021. We had that 2022 year in the middle, I think shocked a lot of investors, got people thinking, sort of back on their heels, concerned and anxious about further downside. What we've seen is a market that certainly can recover and then goes much further than many would expect. So, I tend in this environment to put on my trend follower hat, which I have nice and ready. You pop it on and just make sure that you lock in additional gains as the market goes higher. And we can argue endlessly about how overextended or overbought names like NVIDIA or AMD or Apple or Microsoft or any of those are. At the end of the day, as long as those trends persist, I'm going to want to follow them. So I think a prudent approach to technical analysis mid-2023 is to focus on trends that are working, to make sure that you have a good money management process in place for when those trends change, because they will at some point, just so far not today.
Yeah, absolutely. I mean, I was searching for a metaphor and I kind of came up with the beach ball market idea. Every time they try and hold it underwater, it just pops back up. So in any event, I looked at your last Mindful Investor column. You wrote about Apple hitting that $3 trillion market cap level. That's the rampage we've seen in tech higher. But, also the fact that some of the cyclical sectors look like they might be showing a little bit of a sign of life there. So I'm wondering if you can talk a little bit about that more.
No, it's a great point, Mike. And I would say that what has been happening, if you think about what 2023 has been in the first half, it's been a relatively small number of stocks doing the lion's share of the gains, right? And if you take sort of those mega cap growth stocks out of the picture, it's actually been quite a mixed year in a lot of ways. Yeah. And some sectors have been struggling quite a bit. And I think of energy and others that have been to the downside. Real estate, utilities come to mind. But what's happened in the last month or so, particularly in May into June, is you saw sectors like industrials in particular starting to rotate to the upside, materials starting to show some signs of strength. These are sectors that have been underperforming for quite some time, but now all of a sudden starting to show signs of life. And I would say, if you think about what would allow the market to go meaningfully higher in the second half of the year, I don't think we can continue this trend of just a narrow group of growth stocks leading and everything else struggling. I think you need to see the breadth improve as a lot of those stocks that have been underperforming start to sort of get in, hear the music and sort of get into the vibe with the rest of the growth rate. So I think industrials in particular, when I'm scanning for stocks making new swing highs, stocks that have been sort of basing and are starting to show new strength, industrials is one of those sectors that I'm seeing it in. So if I'm looking for opportunities, it's staying with some of those names that have worked, but it's probably a little late to be chasing some of the extended growth names. I think some of those names earlier on coming out of basing patterns and industrials, materials could be great opportunities here.
Gotcha. Okay. So let's talk a little bit about some of the signals you look for when identifying potential trend shifts. I know you've talked about momentum for stocks and sectors that have been advancing. You talk a little bit about momentum divergences, things you could apply related to breadth. Would you be able to talk about that for a little bit?
Yeah. So what I tend to think when I say put on my trend follower hat, I think as a trend follower, you have three goals, right? It's to identify trends, to follow those trends, and then anticipate when those trends are exhausted. And I think doing those three things every day, every week is really the most important way to handle a market like this. So we've certainly identified that trends have been positive in terms of the S&P, the NASDAQ, those growth names we mentioned. And we're able to follow those by continuing to use trend following techniques to just lock in gains, make sure we continue to make higher highs and higher lows. But there are a lot of leading indicators that help us anticipate when an established trend may be nearing an ending point. Yep. I would argue we haven't seen a lot of those yet, but things that we would be looking for would be a bearish momentum divergence would be number one, showing weaker signs in breadth, particularly in the leadership areas, right? Growth stocks starting to pull back in a meaningful way, not just make a higher low, but start to fail to hold support. All right, these are some of the signals we haven't seen yet, which are often the signs of the end of a bull market phase and the beginning of more of a significant retracement. The kicker is, if you look at a lot of the major market bottoms going back in multiple cycles, multiple years, it's often in the fall, and we may be setting up for yet another sort of decline into the fall, just like we saw last year, that acceleration into the low in October. So I think now that we've had a strong first half of the year, you probably expect a pullback between now and year end, most likely in that September and October timeframe. I think the game is all about recognizing the clear signs that things roll over. And the problem is, for a lot of investors, we get caught in those behavioral traps. Even when the signs are painfully clear, we still stick with something that's worked because it's worked so long. And I think the evidence that the chart can provide back to you is super vital in this sort of environment.
Got it. Got it. That's great advice there. Let me shift gears a little bit and talk about some of the other parts of the market. I mean, you can apply a lot of technical analysis skills to things like bonds, gold, dollar, what have you. What are you seeing elsewhere out there? I think on Twitter you recently mentioned the TLT is just kind of in this long sideways chop pattern. Let's briefly touch on those other markets.
Right. So we're in the middle of this question mark of the Fed, right? Which is the rate hikes, sort of the pause in June. We have a July meeting and future meetings through the course of the year. Markets basically pricing in an additional rate hike coming up here in a couple of weeks in July, and then continuing on from there. And the terminal rate, I think, is a big question mark now as we sort of see what the data presents itself. But, if you look at the bond markets, they really haven't gone anywhere significantly. If you look at the stock to bond ratio, it's been pretty clear, not just in 2023, but for years, that stocks have been a better place. Even in bull or bear market phase, the risk assets like equities have far outpaced the fixed income markets. I don't see signs of that changing just yet. I would say one of the ways you can anticipate a reversal in a bull market phase, besides just looking for clear signs from stocks themselves, is look for improvement in some of the safe havens, right? Some of the areas like gold, where investors might retreat to if things start to get a little squirrely. Utilities or real estate stocks, right? Some of those higher yielding names. But because interest rates are so elevated relative to where they've been, I would expect to move into gold is probably the best signal to look for. You really aren't seeing that yet, right? You're seeing gold sort of retrace over the last 6 to 8 weeks at the lower end of a channel, silver prices as well. And so I think those charts are important to watch to look for some sort of upside reversal. I think that could be an interesting indicator that investors are finally seeing some value in gold and are looking to cushion themselves from potential downside. Again, not yet, but a clear message to look for.
Yeah, okay. Let's shift gears a little bit from market action and talk a little bit more about philosophy and some of the timeless kind of advice that you share. I know you had a video talking about Tesla and the action there, and I found it interesting. You said that the point of technical analysis isn't about predicting the future; it's about taking calculated risks. Can you talk about that a little bit more?
Oh, thanks for that question, Mike. I think a lot of people think of technical analysis as a holy grail. And even though you're probably taught in the first book you read, I remember John Murphy's book on technical analysis, which is the first one I read. I believe it said something exactly like, there's no holy grail, there's no perfect indicator. All you can do is bet on market history and look for the best combination of indications at any given point. And I think a lot of times, particularly newer investors, get caught into this trap of thinking if they can just find this one thing, then it's super easy. And I will tell you now, 23 years into my career, it's never super easy. As much as you'd want it to be, it's a challenging game because market dynamics are different, and there's always something new to challenge you. But what I would say is that in this sort of environment, it's less about what is outside of our control, which is what the markets are doing, right? We don't know what's going to happen tomorrow. We don't know what the S&P or the NASDAQ are going to do. We don't know exactly what the Fed's going to do. What we can do is change things within our control. We can affect what we watch, what we listen to, what information we consume, what we do with that, how we make a buy decision, how we make a sell decision. Those are all things we have complete control over. And so I think if you think about the markets as a lot of different possibilities, we could go up 10% or down 10% and all these other combinations. Think of the probability of those things happening and what they might look like, then you're much better prepared for a very unpredictable market environment, which I would say we're often in, but especially in 2023 after the run that we've had. So I would say focus on probabilities, focus on the different future paths, what you think is most likely, but also those things you think are less likely, because a lot of times those are the things that actually happen. Think through it now before your portfolio gets disrupted because of a confusing outcome.
That's funny. I think you're reading my mind there, because my next question was going to be to ask about two of the risks that you highlighted, the things that you don't, or excuse me, the things you think you understand, but you really don't, and the things you don't know and you're not even aware of. So that was a great point, I think, there. What did you mean when you got to those things?
Well, I think we often expect or hope that we can know all the answers about the markets. And again, I will tell you, having worked with some very successful investors over my career, no one knows all the answers. I think the really successful investors, what sets them apart is they have a really clear sense of what they're good at and a really, really clear sense of what they're not good at. So for example, me, I tend to have a good creative thought process. I'm really good about thinking about different possibilities and what could happen and what that might look like. I am not good at staying disciplined or organized or on top of things. So something that would be helpful to my portfolio to do every day or every week, I literally have to write it in a book. I have a paper calendar. I have reminders. You'd be amazed at all the things that are reminding me to do a certain thing at a certain time, because I found if I don't do that, I just sort of go off on my own. And so recognizing that that's a weakness and surrounding myself with routines and tools and information to help me minimize the impact of those, I think is super helpful. So having a good, honest discussion with yourself about what you're good at and what you're not, probably the best thing you could do to improve your investment life.
Yeah, that's great advice there, David. And, that brings up the fact that you're going to be speaking at our symposium, the Investment Master Symposium in Las Vegas next month in August. Any sneak peek you might be able to give for people that are watching here that are going to be joining us, what you plan to maybe talk about? I know with the markets always changing, some of that can change as well, but
who knows? And it's funny. So I'm doing 2 sessions. I'm really excited to see you, Mike, and others at the event in Las Vegas. One of the events I'm doing is called like top 10 charts to look at between now and year end 2023. That is an intentionally open-ended a bit, because who knows? Well, there's a lot of life that could happen here in the next couple of months. Right? We'll see what's most important. But I think it's important to think about the charts and the guideposts you're going to be looking for. And we'll certainly be looking at the concentration of performance in the growth areas of the market, the underperformance in value areas of the market, and what we would need to see to recognize a shift. And at this point, the trend has been clear. What will we need to see to recognize that the trend is different? That's what we'll be focused on. Then I'm really excited to do a premium workshop. I've not done a masterclass at the Money Show before. I'm really excited to present a 2-hour event. And we're literally going to be talking about 7 questions to ask before every trade. And I'm doing that basically to share my own technical analysis checklist. When I'm looking at a chart, here are the things that I look for. Here are the checks that I make. Is this a bullish chart or bearish chart? I have earned the right to answer that question when I follow that checklist. So in some ways, it's to help share that checklist with others and inspire you to think about your own, but it's really more to help you think about your own decision making and recognize, do I have an established checklist? What's on there? What maybe isn't on there that should be? And I hope it's a really good opportunity for investors and traders to really think about how they're making decisions and come out of that session much better prepared for the unexpected.
Awesome. Well, Dave, thank you very much for your insights today. Thank you all for watching as well. You're going to have the opportunity to learn more from Dave and dozens of other top market and economic experts. If you join us in the Investment Master Symposium, it's going to be the Paris, Las Vegas from August 8th to August 10th. You can find more information if you click the link below. Dave, thank you again for your time. I really appreciate it.
Appreciate it, Mike. Thank you.